You a sense as to how the screen is looking on yesterday's trading day, as we did manage to end at the day's high 17,800, and today of course is the expiry session, so bracing ourselves for quite a bit of volatility, and this at a time when we've seen Wall Street as well wrap up pretty much in the green. You had the Nasdaq as well, which did manage to rally largely on the back of a lot of shares like Microsoft, etc., that were abuzz in trade. But crude oil prices are clearly going to be the talking point, and that's largely on the back of the fact that they have been in the spotlight. Global growth concerns continue to weigh for 4 straight months on the trot. You're seeing crude oil prices that have been on the decline, and interestingly, from the start of the year, crude oil prices have declined 15% from those Jan lows. $70 per barrel is what Brent touched in the month of March, and this week alone, Nikunj, you've seen crude oil prices decline close to 5%.
No, this is after a cut by OPEC. Now, what OPEC did, they came out, they cut the production. They wanted to ensure that they do not lose market share, and crude prices remained stable. But the demand crunch, and this is important, a cut by OPEC, crude goes up, but comes back to levels where the prices were pre-price cut or pre-production cut by the OPEC. So what we saw was more like a reaction, and now the numbness in the demand is bringing oil prices down. So even on a lower production, if oil prices are coming down, that is what is important for us. There are two things which matter here. The dollar index is at 101. Crude prices have gone below 80. Now, if you are an Indian investor, this is like symphony and Beethoven early in the morning, because this is what you want to see. You want to see weakness in the dollar index, you want to see weakness in the crude. That is a clear indication that demand globally or commodity prices globally are reversing. Implications for this, yes, it's a slowdown in the world, but I would say the implications of this for Indian macros are far outreaching in terms of the positives. We all know that lower oil prices is good news for us. We all know that a weak rupee, a weak dollar is good for emerging markets and good news for rupee. So that, I think, for me is the preamble, or I would say is the biggest moot point, that commodity prices are down, crude is down, and crude has gone back to levels of sub 80 where it was before OPEC announced a pre-cut. So 10% crude is out and 10% production is out, and crude prices have gone back to $80.
And what the RBI and the central government has the expectation of $95 to $100 what they have penciled in with respect to their current account deficit and fiscal deficit. So there's quite a bit of room available. So good news this morning coming in as far as crude is concerned, but it's getting offset by the weakness that we have seen in the global equity markets. And I'm talking about the weakness in Dow, because that slide almost 228 points in the trading session yesterday, and this morning to Asia and SGX Nifty is suggesting a bit of a decline. But back home, of course, the key talking point is the fact that today is the monthly options expiry. Over the last 3 months, we have seen a bit of a tepid move come in. We saw that big decline happening in Jan and Feb. March was something where we stabilized, but look at the bounce back that we are witnessing in the month of April. It's a 5% uptick that we have seen this month already. And if you look at, in the years gone by, when had we seen this 5% move? Well, it's not very often. In 2021, there were 3 months when we saw surge of over 5%. And last year, there were a couple of months where we saw that the Nifty managed to gain over 5% in the years gone by. However, the saying, as we were talking about earlier, Nikunj, is sell in May and go away. It doesn't seem like it's going to happen this time around, right?
One should not do that. And markets are moving as per the script. This is pure classic way in which markets have moved in the month of April. From oversold to a zone where the desire to participate long is there. We are not in overbought, guys. We are not in a euphoria. We are not in an overbought zone. That happened in 2022. That happened in January 2022. This is not the market where you want to sell the rise. You want to participate in this market. So market movement, which I've been maintaining, and I'm sticking my neck out and saying that, and I did that in the month of April, that it was time to buy. I think it's time. I think it's too early to sell. I think that really for me is the construct of the market. From a breakdown to a breakout. From a breakdown to a breakout. That is how market positioning has changed. This is an important week, and this is a crucial week. There are numbers. We've been on the right side of the numbers. FI flows have been decent. Crude is strong and supportive. And you stay above 17,800. Trust me, technically it changes the setting on the table. That is what is important here. The setting on the table has changed, and you add another 100 points on here, then markets will start talking about 18,100. So, so do we have a case for markets moving to 18,000 plus? I think this week the chances are strong.
Okay, that's the view coming in. So don't sell in May and go away. That's clearly going to be the strategy. Let's put the spotlight then on individual stocks, and no surprises for guessing that we're going to talk about earnings candidates because it's a very heavy earnings week. Today alone, incidentally, you have 4 Nifty 50 companies that will be coming out with their numbers, but let's sum up the big earnings yesterday. Bajaj Finance, and just taking a look as to what they delivered, overall it was a good set of numbers. You had the profits which came in above street expectations, asset quality improved, and it was an inline set. Maruti as well, you did see quite a bit of choppiness on the stock price, but at the end of the day it was an inline set of numbers. There was favorable forex movement, higher sale volumes, and that really propelled the PAT number, margins in line. SBI Life as well, while the gross premium income did come in below street expectations, the profits as well were low, but the VNB margins and the overall earnings came in line with street expectations. In HDFC Life perhaps was the only one that stood out as a number that was pretty healthy, as you had the overall gross premium income for Q4 that shot up 36% and the standalone PAT at 359 crore rupees. So Nikunj, clearly as of now what is being delivered when it comes to earnings all have been in line with street expectations, and of course today is going to be a critical day.
So what is important is that numbers are. What are the outlier? One outlier was Infosys. That was a company-specific phenomenon. The other outlier, I think, is ICICI Bank. That again is a bank-specific advantage. So the outliers perhaps do not tell you a clear trend per se, but for me there are more earnings which are in line, and in general there is more positive commentary, whether it is from Bajaj Finance, we'll discuss the numbers, or it is from Tata Consumer yesterday, or it was from AU, or for that matter IndusInd Bank. Managements after managements are coming out and they are talking about constructive outlook rather than a dim forecast. Constructive outlook versus a dim forecast. That was not true. A year ago, the narrative was war in the world, high inflation, we don't know what to do, we have to just, protect our, we have to hunker down the growth and margins were under pressure. That is not the narrative. Now what is the narrative? Markets are bottomed out. Margins are bottomed out, demand has stabilized, FY23 was challenging, FY24 will be challenging, but less of stress in terms of managing the macro conditions because the interest rate hike is also behind us. So the narrative is actually not bad at all. Just, you got to remember things in perspective, Anisha Avan. Same time last year, what were management saying? War in the world, high commodity prices, we don't know what will happen, whether it is Ukraine or Russia, whether it is crude or China, we don't know what will happen in the next 6 months. Reserve Bank of India was increasing rates, everybody was running scared with inflation. That narrative has changed with constructive, positive, decent visibility, margins are bottoming out, and demand has also bottomed out. That is a big narrative difference.